Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about JNCEC interim report. Beijing Jingneng Clean Energy Co. Limited offers a diverse range of businesses and services, including generation of gas-fired power and heat energy, wind power generation, photovoltaic power generation, hydropower generation, repair and maintenance services, investment management services, finance, leasing services, sale of electricity to local grid companies. The recent surge in JNCEC stock price can be attributed to several key factors. A rebound in wind turbine bid prices, driven by a self-discipline agreement among major manufacturers, has contributed significantly to the company's growth. Additionally, the National Energy Storage Action Plan aims to increase national installed capacity of new energy storage by over 100 gigawatts within 3 years, driving direct investments and boosting investor confidence. The positive analyst outlook on energy storage, with brokerages like BOCOM International and CITIC Securities anticipating a profit inflection point for the industry, has also played a crucial role in JNCEC's stock price increase. Furthermore, the general rise in wind power stocks, including Beijing Jingneng Clean Energy, has further instilled investor confidence. Overall, these developments have created a favorable environment for JNCEC, leading to its notable 33.13% increase in stock price over the past year. The primary drivers of revenue growth or decline are primarily influenced by various factors within the energy sector. On one hand, revenue growth is driven by an increase in gas-fired power generation, wind power, and photovoltaic power and heat energy generation. Additionally, improvements in production capacity utilization efficiency, innovative business initiatives, and increased investment in newly built projects contribute to revenue growth. On the other hand, revenue decline is primarily attributed to the shutdown of hydropower plants, decrease in comprehensive power supply gas consumption, and a decline in share prices of CGN held by the group. Furthermore, a period-on-period decrease in other income due to expiration of power purchase agreements and market price declines for green certificate components also contribute to revenue decline. Overall, the energy sector's revenue growth or decline is heavily influenced by factors such as production capacity utilization efficiency, innovative business initiatives, and changes in market conditions. Net income and profit margins decline. A shift in revenue streams, the company's net income has experienced a significant downturn, decreasing by 4.98%. This decline is largely attributed to the hydropower segment, which appears to have contributed to the decrease in revenue. As a result, profit margins have also taken a hit, shrinking by 0.34 percentage points from 5.32% to 4.98%. The reduction in profit margins suggests that the company's ability to maintain its pricing power and efficiency has been compromised, likely due to changes in market conditions or operational inefficiencies within the hydropower segment. The company's financial performance indicates a consistent generation of positive operating cash flow over the past 2 years. In 2025, it generated RMB 2,698,872 in net cash from operating activities, while in 2024, this figure stood at RMB 2,513,021. This trend suggests that the company is effectively managing its operations to produce a steady stream of positive cash flow. The company's debt level and interest expenses have undergone significant changes in recent periods. In terms of debt level, the total liabilities increased by 3.2%, with short-term borrowings rising significantly. The long-term and short-term borrowings also saw a notable increase of 2.97%. This indicates that the company has taken on more debt, which may impact its financial stability. Regarding interest expenses, there is a mixed trend. On one hand, interest expenses increased by 2.12% from RMB 599.3 million to RMB 612 million. However, they also decreased by 4.7% from RMB 684,344 to RMB 654,753 in another period. This inconsistency suggests that the company's interest expenses are not stable and may be influenced by various factors. Overall, the changes in debt level and interest expenses indicate a significant increase in the company's financial obligations, which could have implications for its future performance. The company's financial performance varied across different segments. The wind power and photovoltaic power segments performed well, generating significant revenues of 2,698,872 $683,464 and $1,535,364 respectively. In contrast, the hydropower segment struggled, with a loss of $22,210, despite a revenue of $70,922. The gas-fired power and heat energy segment also underperformed, although its revenue was substantial at RMB 6,449,227. That concludes the financial summary for JNCEC. Feel free to comment below, and I will be happy to answer them when possible.